Broadcom, originally known as Avago until it acquired the original Broadcom back in 2016, used to generate most of its revenue from selling chips. However, in the past 8 years, new Broadcom has expanded into the infrastructure software market, acquiring CA Technologies in 2018, Simtex Enterprise Security Division in 2019, and most recently VMware in a massive $69 billion deal last November. This acquisition was designed to strengthen Broadcom's position in cloud and AI technologies. But despite these bold moves, Broadcom's stock recently dropped over 5% following its latest quarterly earnings report. So what went wrong? And is this a good time to invest in Broadcom? Important disclaimer: DukascopyTV is not an investment advisor. Before acting on any investment or strategy discussed, you should always do your own research and make your own independent decision. Now, back to the subject. Welcome back to DukascopyTV, where we help you make smarter investment decisions. Broadcom's recent stock decline was largely driven by weaker than expected guidance in its earnings report. Investors had high hopes, and while the company performed well, it didn't meet those lofty expectations. Broadcom missed some targets for the next quarter revenue and free cash flow, which made investors nervous about short-term performance. When a company like Broadcom is trading at a high valuation, even a small miss can lead to disappointment. This situation is similar to what we saw with Nvidia recently. Nvidia also reported strong results, but the market had even higher expectations. Could investors be overreacting to Broadcom's latest earnings, just like they did with Nvidia? Broadcom's acquisition of VMware has been a major focus for the company. The management is optimistic about the deal, which was finalized last year. VMware is already making a significant contribution to Broadcom's revenue. In fact, VMware's infrastructure software now accounts for 44% of Broadcom's total revenue, up from 22% before the acquisition. Broadcom is also working to improve VMware's profit margins, aiming to bring them in line with its own extremely high margins of around 50 to 60%. If they succeed, this could be a game changer for the company, as VMware brings in billions of dollars in revenue. This could lead to a big boost in profitability. Do you think this integration will pay off in the long run? If you're interested in investing in commodities, stocks, crypto, indices, or bonds, you should definitely try Dukascopy. You can invest with just one click, starting with just $1. Sounds good, right? Simply scan this QR code or check the link in the description below to get started. Fill out the form and then make a video call with a Dukascopy operator. That's all you need to do to open your Dukascopy bank account. Your Swiss bank account with Dukascopy will be ready to use the same day. One of the most exciting areas for Broadcom is its role in AI and networking. With AI demand growing rapidly, Broadcom's custom chip designs and networking semiconductors are becoming critical components for tech giants like Google, Meta, and Amazon. These companies are using Broadcom's custom silicon, also known as XPUs, for AI workloads. While Nvidia dominates the AI hardware market with its GPUs, Broadcom believes that there will be a shift towards more specialized chips in the future. The company expects to generate $12 billion in AI-related revenue in fiscal 2024, thanks to its networking solutions and AI accelerators. The bulls believe Broadcom is still a strong buy because its AI chip sales are soaring and its non-AI chip businesses are stabilizing. The long-term outlook is promising, but the company's current valuation is something to consider. Broadcom is trading at one of its highest valuations in recent years, which might make it less attractive for some investors. On the other hand, the bears remain cautious. They believe Broadcom's growth will slow once the benefits of the VMware acquisition are fully realized. Additionally, debt levels are high and insiders are still net sellers, raising concerns for more conservative investors. What do you think? Should you jump in now or wait for a better entry point? Broadcom's stock drop likely was a short-term reaction to high expectations that weren't fully met. But if you take a step back and look at the bigger picture, Broadcom's strengths in AI, cloud computing, and the successful integration of VMware suggest that the company is still on a strong growth path. Broadcom remains a high-quality business with significant opportunities, especially in high-demand areas like AI and data centers. However, the high valuation may warrant some caution. As always, it's important to weigh the potential for future growth against the current stock price. So, is this the right time to invest in Broadcom? Let us know your thoughts. If you like this video, hit the subscribe button and join us at DukascopyTV, your essential hub for all things related to the biggest financial markets from around the globe since 2008. Here, we bring you diverse perspectives with our range of hosts and presenters, delivering top quality content that's straightforward, independent, and without any ads. Thank you for watching, and I'll see you in the next one. Bye.